Yeah, absolutely. So, typically, depending on what interest rate a borrower chooses, there could be cost of points. So, if a borrower chose a rate that costs one point, for example, and they have a $500,000 loan, then that 1 point would equal $5,000 in closing costs just for that cost of that point. And then you've got underwriting, that's probably $1,000. And then you've got title and escrow fees if they charge any fees for notary service or things like that, cost of the appraisal, and then just recording at the county. That's usually about $600 on the purchase in Washington State right now. They just raised that. Now, there's probably some other things, credit report, just a few basic things. But usually, closing costs are usually between 2 and 3% of the purchase price. That's probably a pretty good estimate. Just round numbers. The lower the interest rate that someone chooses, the more closing costs it's going to be. That makes sense.
That does make sense, and I think that's what I am used to seeing is about 2 to 3%, depending
Mm-hmm.
on the loan amount,
Mm-hmm.
and also depending on what some of the fees are.
Yeah, and I
Uh,
would, and I would say right now, with the interest rates being higher, right now almost everybody's paying points to get the rates to get that payment down because the rates are up, but so are the prices. The prices haven't come down with all the recent increases in the interest rates over the past couple of years. The prices keep going up. So just to make things affordable, people are paying points to get their interest rate down. Maybe we can touch a little bit later on like buy downs, what the different types of buy downs are. We can talk about that too.
yeah, yeah, I actually wanted to go there next because you mentioned some terms that I think we are used to in the industry, points and buy downs. But people that are outside of the industry, I don't know if they necessarily know what that means or even how it works. But there is a cost to them, correct?
Correct. So that example I gave earlier, where you choose a rate that costs 1 point. If their loan amount is 500,000, that adds $5,000 to their closing costs, and then you have a lower interest rate for the whole life of the loan. As long as that loan exists, the rate never changes. That's called a permanent buy down. So they can, if someone wants to just get that payment, they don't want to ever be concerned about refinancing again, and they're just concerned about what's going to happen in the future, then a permanent buy down would probably make the most sense. And then there's another thing called a temporary buy down. The most common one nowadays is a 1-0 buy down, but there's also a 2-0 buy down. So the 1 year buy down, I'm making this up. Let's say the rates today are 6.5%. And if that person chooses a 1 year buy down, then the interest rate for that first year would be 5.5%. And then after that first year, then it goes to the normal 6.5%. And then the same goes with the 2 year buy down. The interest rate for the first year is 2% lower for the first year, and then 1% lower for the second. And then it goes to whatever the market was at the time that they locked it after that. Those can be pretty expensive. Those temporary buy downs, they have to be paid by the seller. So you have to have a seller on the other side of the transaction that's willing to pay that.
Got it. And just real quick, going back to, is there a difference in interest rates when working with a mortgage broker than a different type of lender?
Yeah, so we get everything at wholesale. So I can't say that we're the lowest. That would not be legal. But I can say we're super ultra competitive. Comparing our rates to other types of lenders and my competitors I see out there, it's substantially lower. And then so for the lower you go in the interest rate, the more affordability homes become to clients. So people have more buying power typically when they work with me as opposed to work with someone that has higher interest rates, because they have a payment that's X and their purchase price is 300,000. With a lower interest rate, maybe they can afford 350 for that same payment. Does that make sense?
Yeah, absolutely.
Okay.
Yeah, it does. And so being able to get a lower interest rate and perhaps less cost could make you or help you afford more of a house. That's what it
Yeah,
sounds
and
like.
yeah, and our goal is always to be faster than everybody. I want to be easier to work with than everybody, and I want to be more affordable than everybody. And if I achieve all those things, our client experience is going to be awesome, and then everybody.
Right. And as a broker, it seems that you would have a little more control over that because you're managing, your office and how quickly you guys can get things done. and
Mhm.
turned into the lender or the underwriter. So you just have a little more control over how smoothly things can go. Is that right?
Yeah, 100%. Yeah, we have like a perfect loan process here. So it's like a if you have your favorite cookie, your favorite chocolate chip cookie or something, you've got that tons of people
Yeah.
have a recipe for chocolate chip cookies, right? Everyone
Yeah.
can make one, but they don't all taste the same.
Correct.
I want the
Absolutely.
best darn chocolate chip cookies possible, and if everybody follows the recipe that we've created, it's going to be an awesome experience for the borrowers. It's going to be often an experience for the real estate agents. It's going to be just good for everybody.
Excellent. So, just kind of going off to another subject, or we touched on like credit reports a little bit.